Hello guys, welcome to the Train Parrot. So we finally close this weekly candle on the RSI and we can see that for the second consecutive week, we are below the red trend line. This is a second confirmation of the head and shoulders breakout to the downside. Just to remind you, that has a target of an RSI 34, which coincides with the price of 21.5. On the 1 hour, we are also breaking down as we speak. It has already been confirmed, the breakdown below this trend line that starts from 18th of August. Same story with the 4 hour. We're already 8 hours after the breakout. Interestingly, the price still hasn't caught up with what the momentum is doing. And let's remember that momentum precedes the price. Therefore, most of the time when the momentum tells you a story like this, that is followed by the price later doing a similar thing. Market sentiment is already at 39. During this month, we've been at 37, coming down from the range of 50, 54. But there's a few things that I want to discuss that are indicating that there might be a chance for a relief rally. Guys, if you like this content, make sure you subscribe to the channel, hit the like, enable the notification bell so you get notified every time I publish one of these videos. And there are two things that you can do for this channel. One is watch the video until the very end. And second, leave a comment in every video that you watch. Those two things are really helping the channel to grow every day. So I'm starting the video with this pattern because for me, this pattern is the most important one that we need to keep attention. In my opinion, this is already confirmed. If we look at the DXY, we can notice how aligned are the movements between the DXY and Bitcoin. For example, all this range where DXY is coming down, you can see how Bitcoin is pushing higher. We have Bitcoin around here. Let's move it to the top. And you can see Bitcoin making a big push. DXY is coming down. And then when DXY goes up, Bitcoin went sideways. And then DXY making another move down. And then we get this push from around 21 to around 30. Once it finds the low, it makes another push. Right now, we are breaking above this trend line. We need to find resistance eventually. Once we find resistance, we can have a leg to the upside. But for as long as this keeps printing green candles, Bitcoin is going to be under a lot of pressure. Not just Bitcoin, but also Nasdaq and many other risk-on assets. If you focus on these last candles, you're going to notice that we have 1, 2, 3, 4, 5, 6 weeks in a row with the DXY going up. Just focusing on the visible range in this chart, I cannot find any place where you get more than 6 green candles on the DXY weekly. We're getting to the top of the Bollinger Bands. During this week, we had a bunch of events that we need to keep an eye on. We had the PMI on Friday, unemployment claims, core PCE price index. There's a bunch of things that should provide some sort of volatility during the week. If we look at the past 7 days in terms of liquidation levels, we can see that if the price moves even to 27.2, it will take more liquidity from the right-hand side compared to what it can take from the left-hand side, just considering the liquidations that have accumulated in the past 7 days. Later in the video, we're going to look at Hybrid Capital to see liquidation levels in the higher timeframes, 1 month and 3 months. But here's the thing. On the daily, 4 hour and 1 hour, I only see shorts. This is just incredible. And for a long time, I haven't seen all the timeframes align. We are still above this level of support. This level is extremely important and is the difference between being in this range on the top versus being on this range right below that reaches straight into 20. There's a third level which will start from around 15 to 20. On the daily, we still see this support here. And on the 27th of August, we receive a bullish hive signal. This is a buy signal and it's got a target to 27.2. We are currently in drawdown because it triggered from 26. Buy signals from the hive, in my opinion, are not as accurate as the sell signals, especially right now that we still seem to be in an extended bear market. But it's one thing that we need to count towards the thesis that maybe the price could bounce here to take this higher liquidity not necessarily making a higher high, but at least punishing this exaggerated amount of shorts that we currently have in the market. If we look at Lux Algo Premium, we can see how we are doing these lower highs every time hitting this trend line. And right now we are doing some liquidity hunt against the discount zone, and that could potentially break out like this and get to the top of that range. This is on a 15-minute chart. A similar scenario happened a few days ago when we were coming also around here. We made a double bottom against discount as well. That didn't give a massive move, but enough to punish all the late shorts entering around here. One interesting indicator that has been performing really well is free. It's called Trendilo. I reviewed it in one video recently, and you can see every time we exit this area below the bands, there's a move to the upside, which is really great to trade the range. For example, you get this drop here and then you can get an entry. There's also this entry here. So for doing short-term scalping, this is working really well. Today, it looks like a very red Monday with a few exceptions with DYDX and HEX taking the lead, followed by CRV and FIL. Interestingly, Cerberus ended up closing the week with a warning buy. The last warning buy we had was around here at 25.9. The week after we made a move of 18%, but be aware that a warning buy during the bear market is not enough, and waiting for the buy is a better alternative. This is how it looks Cerberus in the previous cycle in a similar area. I was anticipating that we might get a bounce with a higher low and then a golden sell eventually heading towards 2024. But instead of that, we're getting a lower low with a warning buy. Total 3 is still in a sell area in the 4 hour, but is starting to do some higher highs. Most likely in the 1 hour, this is already in a buy area, but heading towards the resistance of the 4 hour. And that actually coincides with what we are seeing from altcoin season. The index is currently at 31, so it bounced back out from Bitcoin season area, which is below 25. And these are the coins that currently are outperforming Bitcoin. Bitcoin is sitting around here, many levels below RLB, which is taking the lead with 566%. I also want to cover NVT, what happened last week. We broke down below this level with the network value transaction. This is on-chain data. Watch my previous videos to know how to use it, but I can show you the performance. When you get these areas in yellow around here, you normally have some big bounces. In the past week, I reviewed in the video the performance. Even though they don't look that big, they're actually pretty large. Like for example, this triggers there and it makes a 30% to the upside, and they tend to stay yellow for a while, and you can wait until it switches off and then decide what to do. I'm just giving you a heads up because this hasn't triggered during this candle, which might mean that for the first day we don't get the signal, but at the same time we are against resistance there. So I would like to see the NVT come up above the trend line and recover. The Bitcoin dominance in the weekly is doing a second green candle and now sitting at 49.22. Why is it so important to look at the dominance? Because if the dominance breaks below this area around here and it re-enters this range, it will help a lot to give us some opportunities for alts. If it holds around the 49% and it makes a higher high, it will most likely come with a push of the price of Bitcoin, making higher highs, but again, punishing the altcoins. So in summary, holding the 49 and pushing higher, not great for alts, amazing for Bitcoin. If the dominance of Bitcoin comes to this area below the 48 and it breaks down the trend line, breaks down the support, then it could be a great opportunity for alts. We still have the CME gap starting from 27 to 27.5, but most people are still paying attention to the 21K CME gap. On the weekly, on fire charts, we can see that the price really wants to go to 25K and 24.8. Those are levels very accumulated, and also 22.2. To the upside, we barely have levels on the weekly except for 30 and 31K that are not as big as the one below. If we go to monthly, we see the same picture, and to 6 months as well. So 25K seems very attractive from the point of view of fire charts when it comes to liquidity. Now, what are the whales doing? You can see that the 1 million to 10 million are now going sideways. There's no more selling, but they're going sideways. The 100K to 1 million are coming down together with the rest of all the sizes. We need to see one of the larger, it could be the purple or the brown, to start taking the lead and start buying. I suspect that that will happen if first we go and grab the liquidity at the top, we go to 27, potentially slightly higher, catch some late longs, and then dump straight into the 25K. August and September tend to be historically pretty bad, so it's not a surprise. We have covered in the past videos this fact, and pretty much everybody is in the same mood. Let's look at high block capital. The last 3 months of liquidity on the 3 exchanges are looking like this. There's liquidity to the downside, no level to the upside is comparable to 24.2 in the last 3 months. Very significant level. If we go to the yearly, we can confirm that 23.6 on the yearly is the largest level. A spring around here will make a lot of sense. Let's have a look at Bookmap. If you want to trade any of these setups, consider doing that on OKX. OKX is my favorite exchange. Currently, I'm hosting this exclusive event to unlock up to 60,000 in rewards. You're gonna need to open a new account on OKX using my referral link, Parrot. That's gonna automatically give you 20% discounts in all fees lifetime. And then using your new account, find the link in the description for the exclusive event and click join now. The more you trade, the more you deposit, the larger the rewards. You get less fees, you get rewards, and you're also supporting the channel. By having a look at Bookmap, what I'm seeing is on the 25.5, 772, that level is becoming thinner with time. 25K has 450. If we zoom out, we can see that there's a lot of buying around here, but the CBD still is showing 37.5 over 36 buyers, which is 1.5K more sellers than buyers, confirming the charts that I showed you before on TradingView. Let's have a quick look at the smaller scale. 25.8 is the level that is currently trying to keep the price within the range. You can see how 25.9 is less volume, is 550 compared to 850 at 25.8, but it still has managed last night to hold the price within the range. Now, this line that we saw in the previous pattern from Lux Algo is kind of squeezing the price against the 25.9, the 25.8, and eventually one is going to blow. Either it's going to break the 25.8 straight away and go to the lower levels, or it might break out above this downward sloping resistance, imaginary in this chart, and eventually head up to take the higher liquidity. Indicators like NVT and the bullish hive are longer terms, so they are not related to what's going on here in the smaller time frames within the price action today. And I think it all comes down to the DXY can keep pushing higher. If that is the case, most likely when market opens, then we might head down to take lower liquidity first, leaving all the sack of liquidity pending for a later stage. In my opinion, the thing that is most bullish right now is the amount of shorts and how exposed they are. But when looking at high block capital, if we look at this delta, they are currently exposed at 2 billion, which is showing me that there's something really off. If all indicators are saying that most of the people are short, and at the same time the liquidity from those shorts being exposed in the delta is so insignificant, either the exchangers are hiding that volume or there really is no volume in the market at all, because everybody being short and only 2 billion is nothing. Usually it takes way less of shorts to sometimes see 20, 40 billion in shorts exposed. So where are they? It's quite intriguing, and I'm very curious how things are going to play out the rest of the week. Let me know in the comments what you think comes next. What is your forecast for this week? Thank you so much for watching the video. If you appreciate the content, hit the like and don't go anywhere without leaving me a comment. I'll see you in the next one. Bye bye.